What's going on, guys? Today's article is brought to you by Routers. China's yuan weakens as lack of rate cut for mortgages deepens property woes. The yuan currency weakened on Monday as China's surprising decision to keep the key mortgage pricing benchmark interest rate unchanged, while cutting banks' one-year lending rate fueled concern over a lack of support for its aligning property sector. The spot yuan opened at $7.2946 per dollar and weakened to 30 $67 30.67 by midday, 212 points pips weaker than the previous late session close and 1.50% weaker than the midpoint. The People's Bank of China set the midpoint rate around which the yuan is allowed to trade in a 2% band at $7.1987 prior to market open, firmer than the previous fix at $7.2006 and over 900 pips stronger than market projections. The offshore yuan was trading 0.25% weaker than the onshore spot at $7.3251 per dollar. The greenback was broadly stronger, with the dollar index rising to 103.386 from the previous close of 103.375. Increasingly worried by China's faltering economic recovery, investors were disappointed by the latest interest rate action. China cut banks' one-year loan prime rate by 10 basis points to 3.45 as expected, but it surprised the market as the 5-year rate was left unchanged at 4.2%. The decision defied analysts' expectations for a big cut in the 5-year rate, which influences the pricing of mortgages, as it was seen as a much-needed move that could spur credit demand and shore up the property sector. Raymond Cheng, head of Hong Kong China research at CGS-CIMB Securities, said investors would now be questioning how seriously they should really take the recent draft of measures. He said it would now take more specific instructions from the central bank with quantifiable targets given to lenders to restore confidence in the property sector. The central bank said in a statement on Sunday that China would coordinate financial support to resolve local government debt problems and reiterate a commitment to optimizing credit policies for the property sector, but that did not do much to assuage concerns over China's flagging economic growth. UBS has downgraded its 2023 forecast for China to 4.8% from 5.2 and to 4.2 from 5% for 2024. Due to the deepening downturn in the property sector, which accounts for about a quarter of the economy, weaker property activities should suppress demand for industrial goods and hence industrial investment, as well as constraining local government spending and infrastructure investment, said UBS economists in a research report on Monday. UBS has also revised down its 2023 end forecast for the year to $7.15 per dollar from $6.95. Offshore one-year non-deliverable forwards contracts, considered the best available proxy for forward-looking market expectations for the yuan's value, traded at $7.0923, 1.50% away from the midpoint. 1 year's non-deliverable forward contracts are settled against the midpoint, not the spot rate. The yuan market at 3:31 a.m. Greenwich Meridian time. So basically, guys, what they're saying is that China is going through a financial crisis. It's not the first time that we've seen this happen. It's happened in the US as well in 2008. So China is going through a financial crisis that is caused by mortgages. So a lot of that money that was invested in China is gonna get out of there and go into the US, where the market is doing pretty good, and we're gonna see it push the dollar index higher for that reason. So let's go out there, guys. The world is your oyster.